Hello and welcome. My name is Jason Ramos with daytradingfearless.com. This video series is called the Stock Market Trading Video Course. Learn how to trade the stock market. So what we're going to go over in this video course is learn what the stock market is and how to trade it. You're going to learn chart reading and technical analysis. You're going to learn how to day and swing trade the stock market. And you're going to learn different trading strategies to actually trade. So welcome. Let's first start off. What is the stock market? Well, the stock market in its simplest form is a mechanism for a private company to go public, and what they do is they sell shares of their company to the public to potentially raise money so they could build their business. Okay, we'll take Apple for example. Years and years ago, Apple started off as a private company. They actually had to start to raise money. Okay, well, during their process of raising money, they were going to friends, families, and then they start to move up to investors. And these big investors, it could be a hedge fund, it could be a doctor, whoever, anybody with money, and they want a return on their capital. Well, they might believe in the vision of the CEO and the company, and they go, hey, I want to invest in the company. So what happens is, as the owner of a company, we'll take this instance, Apple, they actually have to give up part of their company, okay, or a percentage of their company for the capital. Well, with that capital, they're able to grow their business, stock inventory, pay their employees, do all this, and they're able to grow their business from there. Eventually, once you start to get too big, right? Too many investors that you actually have to start to pay back. Okay, that's usually when the company's going to take their company public. The reason being is that's so all the investors, okay, the early investors, where they invested, we'll say 100,000 and they own X amount of shares, they're actually able to cash out and get all their money back and a return on their money that they've invested throughout the years. And that's essentially what the stock market is. You're just making bets, okay, on future earnings. If you like the company, do you believe in the management? Do you believe the company's can grow? Okay, if you do, you go out and you go to a brokerage firm and you set up an account, you buy the shares of a stock. Okay, so currently, if I want to buy Apple, I could go to the public marketplace. Okay, and I could buy shares of Apple where I actually own the company. Well, I get a dividend. Okay, not all companies pay a dividend, but Apple's doing really good. And a dividend is a way for the company to take part of its profits and pay back the investor. It's kind of a way to find investors to come invest in their company, because of course, the more money that there is, okay, that a company has, the bigger they could grow. The problem is some companies grow too big, or too many investors jump in, okay, and they move the price up and down. So that's essentially, on the most basic form, what the stock market is, okay? It's more of, think of it as a big game, okay? But there's a lot of homework that investors go into. Is this company spending their money well? Is this company doing all this? Okay, so we'll get into that throughout this course. Second, what exactly is a stock? Okay, a stock is a share of the company. Now, when a company goes public, or if they need to raise shares, okay, once they've already gone public, they'll do maybe a second offering, and they'll sell shares of the company to raise funds. Okay, maybe they want to open new restaurants. There could be a series of things that a company wants to do to raise cash, maybe pay a dividend, okay, to their long-term shareholders. But essentially, a stock is where you could go to the open marketplace and buy shares of that company. Okay, and you actually become a member, you own part of the company. What you're hoping for is you buy low, sell high, correct? So timing is everything, but you also need to do your homework. Fundamental versus technical. What's the difference here? Okay, fundamental is everything such as PE ratios, price to earnings, how well's the company can do. Are they growing their business? Are they in debt? Are they out of debt? Are they doing everything correctly? Are they cash positive? Are they cash negative? Do they have a lot of outstanding debt that they owe? Okay. Of course, the more debt the company has, okay, then the less favorable they potentially might be, unless they're growing their business and they actually have cash coming in. But if they don't have cash coming in, okay, but they keep getting deeper and deeper into debt, that's not a company I want to invest in, right? So there's all these different factors of what exactly is part of the fundamentals, okay? And that, again, that's everything to do with the business side of the company. So now, what exactly are now versus technicals? Okay, technicals is everything to do with the charts. Okay, and that's when you go to your brokerage firm and you pull up a chart, a stock chart, and you're able to see patterns. Is the stock making higher highs, higher lows? Okay, and what happens is fundamentals for the very long term. Technicals are going to be for the day trader to the very short term, okay? You're able to see where a stock has been and then predict potentially where a stock is going to go, okay? And that's the technical side of it. It really doesn't have anything to do with fundamentals. It's just kind of like where's the stock been? Is it making a specific bullish or bearish pattern? Okay, there's all these different things that you want to look at on the technical side, okay, to either go long or short. Now, maybe I just love Apple, kind of going back to Apple. Maybe I love everything they're doing. I don't care what the price is today. I want to buy this for the next 10, 20 years. And I just kind of hope that it's a lot higher in 10 or 20 years than when it is now. That's more of the long-term buy and hold strategy. So how do you trade a stock? Okay. When you trade a stock, you first need to go to a brokerage firm. Okay, a brokerage firm. I personally use TD Ameritrade, Thinkorswim, their platform. I've used them for years. I think they're one of the best companies out there. They're always updating. They're always innovating. Okay. Now, you could go to 20 different places, E-Trade, Charles Schwab, Fidelity. Okay. But my personal favorite is Thinkorswim. I've used them forever. I get decent, really good commissions. If you trade a lot, you could call them, lower your commission base, okay? But essentially, the brokerage firm is the middleman between the buyer and seller, right? So if I want to buy a stock, I need to go somewhere to be able to buy the stock, right? I can't just go right to the floor and buy it. So I have to go through a regulated brokerage firm, set up an account, and all I do is they have software that they've built, and essentially I click buy, I pull up the stock I want, I see the chart, everything like that. I click buy, and I'm able to buy the stock, okay? Now, what they do is they send that order to the marketplace and they purchase the stock for me from a seller, okay? Because there's going to be somebody out there who's looking to sell the stock, right? At that exact price. That's what a bid and ask is, okay? So what happens is I place the trade, they buy it for me, all of a sudden it comes back, it alerts me, okay, you bought XYZ at XYZ number, okay? Then what happens is I'm able to track the up and down through the charts and also see my profit and loss. When I'm ready to sell the stock, I do the same thing. I just click sell. It sends it to the marketplace. It sells it. It comes back, notifies me, lets me know, okay, hey, your order's been filled and I'm out of the trade. Okay, now there's what's called a clearing firm. A clearing firm is actually the company that clears all the trades. They hold the certificates, because years and years ago it used to be paper certificates. Now everything's done electronic, and the clearing firm runs all the money through in and out of the brokerage firms of when people buy and sell stock. Recommended trading platforms. Again, I use Thinkorswim by TD Ameritrade, also known as TOS. That's where the Think or Swim is. But they are, like I said, and I don't get paid from them. I found somebody who works. I love the tools. You pay zero for all their data. You might pay a little more in commissions than other people, but you also don't pay for any of your data, your futures data, options, nothing like that. When you start to look at other brokerage firms, you'll see that you actually have to pay for quotes, for data, all these different little fees that add up. With Thinkorswim, it's you pay a commission and that's it. Very simple and easy. And then kind of coming down to commissions. What exactly are you going to be paying for commissions? You're looking at around $7, usually for unlimited amounts of stock with them. And then I personally pay $1.50 per option contract, about $6 round trip for futures. You can always negotiate depending on how much you trade, but everybody else is going to be around the same. You might be able to trade futures a little cheaper with other companies, but again, you have to pay for all the data fees. So that's it for part 1 of the stock market video trading course. Coming up next is part 2.